Hello everyone, in this video we are going to talk about answers to reading quiz chapter 7 and also we will discuss some Edfinity questions from this week's assignment. So let's start with the first question. Question 1. Which of the following is an example of an implicit cost? First, let me briefly explain what an implicit cost is. Implicit costs are the costs that are the foregone opportunities for a business. For instance, if you graduated as an accountant and you could be able to earn with the accounting degree $45,000 a year and then you give up that opportunity to start your business, then this foregone wage is your implicit cost. So this is one example, the opportunity cost of your time that you put into the business. Second example of an implicit cost is what the owner actually owns. So owner may have the store, so the owner owns the store, and the owner can rent the store, let's say $1,000 a month. But if the owner uses this store for his or her own business, then we're talking about a foregone rent. Foregone rent in this example is an implicit cost. And another example of owner's resource is the financial capital. So for instance, owner might save up 100K and this 100K may earn 5% interest, $5,000 annually. But if the owner uses this 100K in the business, the owner gives up this 5% of interest, which is $5,000 of earning over the year. Therefore, this foregone interest earning is an example of an implicit cost. So based on this, we can find the right answer. Which of the following is an example of an implicit cost? $25 hourly wage paid to a seasonal clerk that a firm employs on a contract basis. This is an explicit cost, which is in fact cost of labor. Second option, the $40,000 in rental income an entrepreneur no longer receives after converting the rental space to their new storefront. This is an example of an implicit cost. Now the entrepreneur is giving up the rent income. Therefore, it's a foregone opportunity. So the right answer is the second option. Federal taxes paid by the firm. This is an explicit cost. $60,000 spent to purchase the lumber needed to create a product. This is another explicit cost. So explicit cost requires cash outlay from the pocket, but implicit cost does not. So let's look at question number 2. Mathematically, marginal cost is expressed as what? So let's remember what is a marginal cost. Marginal cost is the change in total cost. It's the change in total cost when you change the quantity. So you want to know if you increase the production by 1 unit, how much you need to spend to produce that additional unit. That is called marginal cost. Given this definition, the right answer is the third option, the change in total cost divided by the change in output. Question number 3. Mirta owns an online jewelry store that specializes in earrings. In March, she sells 50 pairs of earrings priced at $15. So we can calculate the total revenue here, quantity times the price. The cost of materials to create the 50 pairs of earrings was $100. The website she uses to sell her wares costs her $10 a month. And she is also charged $4 on each sale by the company that processes debit credit card purchases. So in this example, we need to find Mirt's total cost. And we know that first, the material that she needs to buy to produce earrings is a cost, $100. And she needs to pay $10 for the web page. Therefore, that's another cost. And also she is charged $4 on each sale by the company that processes debit card. This is another cost. So the right answer is the sum of materials $100, website charge $10, and 4% payment processing charge. Question number 4. The input factors of production include land, labor, capital, technology, and entrepreneurial ability. Which of the following is an example of capital? Let's see each of them and classify into the correct category. The 200 acres the factory sits on is land. The machines required to produce cars is capital, physical capital. The secret formula used to create a can of Coca-Cola is entrepreneurial ability. The total of all the workers employed by the firm is the labor. So what is missing here? Technology. So if one of the option is a faster machine, then we will classify faster machine as technology. Question number 5. We can describe inputs as either fixed or variable. Thinking about a company that assembles cars, which of the following would be an example of a fixed input that could not be changed in the short run? So here, let me briefly explain what are the difference between the fixed inputs and variable inputs. So fixed inputs, you're going to pay for it, but this fixed inputs, the amount you pay to the fixed inputs, does not change when you increase the quantity. Variable inputs, on the other hand, the amount you pay to the variable inputs increases as you increase the quantity. So based on this information, let's find out which one is an example of a fixed input that could not be changed in the short run. And fixed inputs do not change in the short run. In the long run, all inputs are variable. So let's start with the first one. The electricity required to support the assembly activity. This is a variable input because you have more activity, you need to use more electricity. The robots that help assemble the cars, the same idea. You produce more cars, then you have to have more robots. The employees that work for the company, again, you want to produce more cars, you have to have more employees. The building where the assembly takes place is a fixed cost in the short run. You can't change the building's size until the leasing period finishes. Therefore, the right answer is the last option. Question 6. A production function is a mathematical expression or equation that explains the engineering relationship between inputs and outputs. So production function is such that FL and K produces Q. So these are the inputs, labor and capital, and here Q represents the output. Question number 7. The long run is the period of time during which all inputs or all factors are variable. So for instance, let me give one example. If you have a restaurant business and you have a lease agreement of the restaurant space for 12 months, then 12 months is short run for you because the rent you pay for the restaurant or the lease is fixed. You can't change it. Even if you don't produce anything, your business doesn't go well, you have to pay the lease amount for this 12 months. But after 12 months, then you are in the long run for this business because you can choose a different place, you can continue with the same place. So long run is the combination of many short runs in which one factor is fixed in the short run, but in the long run, all factors are variable. Question 8. The factor payment for the use of financial capital, loans and equity investments is called interest and dividends. Rent is for the land, wages is for the labor, and entrepreneurial activity is the profit. Question 9. The portion of a long-run average cost curve that is downward sloping is called economies of scale. So let's understand what we mean by economies of scale. If your long-run average cost curve is like that, it's going down as you produce more, then you have economies of scale. And we have many reasons why we have the economies of scale. First of all, with increasing quantity, specialization increases, therefore production becomes less costly, and that's one of the reasons we see economies of scales. Question 10. Which of the following best describes marginal product? So marginal product refers to additional unit of output and additional input produces. So for instance, if you hire the first labor, total product is 10. If you hire 2 workers, total product turns out to be 15. The additional output produced by the second worker is 5, and that represents the marginal product of second labor. So given this definition, the right answer is here, the last one. When the number of bakery staff increases from 2 to 3 bakers, 5 additional loaves are made. Next, let's look at some questions from Edfinity. So first question we will look at is number 6. But in this question, first we calculate explicit cost and next we calculate the implicit cost of the business, and then we calculate accounting profit and economic profit. Suppose that the firm Multimax sells 26 bicycles for $139 per bicycle. Each bicycle costs $90 to produce, and Multimax could rent out their factory space for $650 per month. So here, explicit cost requires the cash outlay. Therefore, $90 per bicycle for each bicycle, then you need to multiply this by 26, is the amount of explicit cost. In this case, it's 90 times 26, which is 2,340. Now let's calculate the implicit cost. Do we have any foregone wage, foregone interest earning, and foregone rental income? We have rental income, which is $650 that this business has to give up in order to produce the bicycles. Therefore, 650 is the implicit cost. Let's calculate now accounting profit. Accounting profit only counts explicit cost as total cost. So accounting profit is total revenue minus explicit cost. And what is total revenue? Total revenue is $136 per bicycle times 26 bicycles minus the explicit cost. So let's calculate this amount. So this part, total revenue is 3,536, and we need to subtract 2,340. So accounting profit is 1,196. How about economic profit? For economic profit, we need to subtract from total revenue both explicit costs and implicit costs. So we know that total revenue minus explicit cost is this much. So we need to subtract one more cost, which is implicit cost, to find the economic profit. In this case, the right answer is going to be economic profit 1,196 minus 650, which in this case $546. So this is how we calculate explicit cost, implicit cost, accounting profit, and economic profit. Let's solve question number 9. In this question, we are going to calculate the marginal cost. And remember, marginal cost is the change in total cost divided by change in total quantity. So the quantities in this table are increasing by 1. The denominator is going to be always 1. And the change in total cost from, for instance, 0 units to first unit is 28. So marginal cost of the first unit is $28. Marginal cost of second unit is 48 minus 28 divided by 1. So this is the marginal cost of second unit, which is $20. The third unit additionally costs us $12. The fourth unit $6, and fifth unit costs us $1. So this is how you calculate the marginal cost. And the last question I'm going to solve today is about marginal product. So what is marginal product? Marginal product is the change in total output, total quantity, divided by change in labor. And in this example, again, number of workers are increasing by 1, therefore denominator is going to be always 1. So let's find out the marginal product of first labor. It's the change in total output from 0 to first labor, 25, divided by 1, 25. For the second labor, the total output changes from 25 to 49, so 49 minus 25, which in this case it's 24. And for the third labor, the total output increases from 49 to 72. So 72 minus 49, which in this case 23, and so on. This is how we calculate the marginal product. And we can see in this example there is diminishing marginal product because it starts with 25. The first labor adds 25 units, second 24, and third 23. As you see, the additional output that each worker produces decreases. Therefore, we can see the law of diminishing marginal product in this example. So these are the questions for chapter 7. Thank you for watching.